Thank you all for having me today. I would like to make this as interactive as possible. And so I'm going to speak for a few minutes, maybe 10 or 15 minutes, talk about the Federal Reserve, but then I really want to hear from you. Hear your questions, hear your ideas, and give me your feedback. And let me explain to you why. I like to go around and explain a little bit about what the Federal Reserve does, because most people, not just in our region, most people in our country don't really understand it. So it helps to level set. Well, the Federal Reserve is our nation's central bank. It was created in 1913 by Congress. But you know what, something's funny. Our country has always hated the idea of having a central bank at all. The reason is, the first central bank was created by Alexander Hamilton. It lasted about 20 years before it was disbanded. The reason our country hated having a central bank is it sounded mysterious. A bunch of bankers in a room, smoke-filled room in Washington, D.C. or New York, making decisions. God knows what they're doing. God knows why they're doing it. We just don't like it, so we're not going to have a central bank. So it was disbanded in the 1800s. But then our country kept getting hammered with banking crises in the late 1800s, and then a really big one in the banking panic of 1907. And so Congress said, well, we can't have this continuing. We need to do something. I guess we need a central bank, but we still don't like the idea of it being concentrated in Washington, D.C., a bunch of bankers in smoke-filled rooms doing God knows what. So the compromise that Congress came up with was a distributed central bank, and that's something that is unique to our country. So you've heard of the chair of the Federal Reserve. That's currently Janet Yellen. Before that was Ben Bernanke. Before that was Alan Greenspan. Well, the Board of Governors that Janet Yellen chairs is in Washington, D.C., appointed by the President of the United States. And then Congress created 12 regional Federal Reserve banks, including the Minneapolis Fed, that are separate. And we're meant to bring a different perspective to the monetary policy discussion in Washington, D.C. So my district, the Minneapolis Fed's district, is Minnesota, North and South Dakota, Montana, the Upper Peninsula of Michigan, and part of Wisconsin. So my job is to hear from all of you, learn from you what's happening in the local economy, and then when I go back to Washington, D.C. 8 times a year for our interest rate discussions, I can bring this local perspective on what's happening here on the ground. And the Minneapolis Fed down the street, we have about 1,000 employees. We regulate banks. We provide cash. So if you see Brinks trucks driving around the district, they're probably coming to or from our vault. We have community outreach. We do economic research. But in large part, it's trying to meet with people like you across our community to understand the local economy and bring that perspective back to Washington, D.C. That's why when I say to you, it's so important that you speak up. You tell me what's going on in your businesses, in your neighborhoods. I get to hear that, and it makes the data that we look at much richer. And so thank you for having me. Thanks for participating in what I hope will be a vibrant Q&A. I also like to say to people, do me a favor and ask me your toughest question. And I mean that, because if you're thinking of a tough question for me, there's a good chance somebody else is thinking of the same question. And I would much rather you get that question out in the open and give me a chance to respond to it than have a bunch of you leave wondering what the answer is. And so I mean it. When we get to Q&A, fire away, ask me your toughest question. I would love to hear from you. Excuse me. So I've been at the Minneapolis Fed for about 1.5 years. I started January 2016. I was born in Ohio. I went to school at the University of Illinois. Started out my career as an aerospace engineer before I got into finance and government. And so for me, coming to Minnesota is a lot like coming home. I feel like I'm a Midwesterner at heart. So it's been a very easy transition for me and for my wife into the Twin Cities. But people ask me all the time, what has surprised me about coming to Minnesota? What surprised me about the economy? You know, our economy here has a lot of strengths. We have a very diverse economy with most major sectors represented, whether it's high tech, healthcare, services, manufacturing, ag, commodities, et cetera. They're all represented here and doing very well. And that diversity helps our region because some sectors might be up while others are down. It helps the overall region. Overall, relative to the country, we have a highly educated workforce. Overall, on average, we have good schools. People are doing well. We've got a strong job market here. So overall, we've got a lot going for us here in the 9th District and in Minnesota in particular. But the thing that has surprised me to the downside when I got here was the extent of the disparities in Minnesota in particular. So our average fellow resident is doing very well. The median is doing very well, but the gaps are very, very high. And that really surprised me, given all the strengths that we have. And this is going to be relevant, I think this is relevant to your group and to your aspirations in wanting to make Minnesota one of the leading tech, you already are one of the leaders, but even stronger as a leading tech state in the nation. So I started asking questions about our researchers at the Minneapolis Fed and around the Federal Reserve System, saying, help me understand these gaps. Why are these big disparities? And let me give you an example of a data point that will really hit this home for you. If you look across the country today, African American unemployment is roughly twice white unemployment. But the thing that's shocking, it's not just today. If it's a booming economy and white unemployment is 4, African American unemployment will be 8. It'll be 2x. If it's a recession and white unemployment is 8, African American unemployment will be 16. It'll be double. Even if you take education against education, so if you take college graduate against college graduate, the ratio maintains the same. If you take high school dropout against high school dropout, the ratio remains the same. And these trends are also true for Hispanic Americans as well. And so that's just an example of structural disparities, but shockingly, as shocking as the disparity is, what's even more shocking to me is we don't have a good analysis for why that disparity exists. So one of the mandates that Congress has given the Federal Reserve, we've got 2 mandates that we talk about all the time. One is stable prices. And what that means is an economy that's not overheating and not limping along. I would consider it steady growth. And then second, maximum employment. That means every American who wants to work can get a job, hopefully a good job, hopefully a full-time job, but maximum employment. So for us to achieve our maximum employment mandate, we need to understand why some groups are not participating in the same economic growth that other groups are enjoying. So it's relevant to Minnesota, it's relevant to our region, and it's relevant to the country. So I was surprised at the disparities in Minnesota. I was surprised that we don't understand why they are. And so I said we should do something about this. So I started talking to the chair of the Federal Reserve, Janet Yellen, who also agrees that these are very, very important topics and appropriate for the Federal Reserve to try to analyze them. And in January of this year, we announced at the Minneapolis Fed what we're calling the Opportunity and Inclusive Growth Institute. It's a research institute bringing the best academics from across the country to Minneapolis to partner with us to research these problems, to try to understand the structural factors, and to look at possible policy solutions. Now, we know the Fed cannot solve these problems by ourselves, right? Our primary policy tool is setting interest rates. So if the economy is getting too hot and inflation is climbing, the Fed raises interest rates to cool things down. But those interest rates that we set affect the entire economy at once. We can't target interest rates on a certain region or a certain sector or a certain population. So we know at the Fed we don't have the tools to address certain communities that may be challenged or certain racial groups. And by the way, this is not just about race. It's also about rural versus urban and the disparate outcomes many Americans in our district are feeling. Race is one factor, but not the only factor. So we know monetary policy cannot address this. But if we can do the research that unravels these disparities, analyzes potential other policy solutions, and puts the data out there for you, the public, to consider, for your elected representatives to consider it, then I feel like we are doing our part and making the contribution that we are here to make. So that's what we're going to do. But these are problems that are decades or longer in the making. We're not going to come up with a solution in 6 months or a year, but we need to get going. And my message to you is we are going to get going. We're getting going now. Our first conference on this topic is in 2 weeks in Minneapolis. Some of the best experts in the country are coming to the Minneapolis Fed to begin this dialogue, to begin this work, to see how we can start to crack this nut. So that's important. Now, as it relates to high tech, in preparing for this discussion, I met with some of our economists at the Minneapolis Fed to say, what does it take? And I think you all already know this. What would it take for Minneapolis to leapfrog ahead to really drive the tech community in the country? Obviously, one of the key factors is a very highly educated workforce. And again, I feel like we're operating from a strong position, but we could be stronger, and we need to be stronger. And many companies that I meet with, and I bet you will tell me the same thing, you struggle to find skilled workers to serve in your companies. And so the solution to that could be a number of things. One solution is, as you keep increasing wages, workers will come from across the country. All right, that will happen. You saw it in North Dakota, oil boom. They had workers coming from all across the country to take advantage of those high wages. So as wages go up in Minnesota, you will see workers come from around the country to take these jobs. But you know what would be better than that? If we actually educated all of the Minnesotans who are here today so that they could take those jobs and so that they would have the skills to take those jobs. So that's where I see that our work in our research institute can, over time, directly lead to hopefully helping you achieve your goals of making Minnesota a top 5 tech state. So the workforce is clearly a huge factor. The university is clearly a huge factor and a really important asset that we have here at the University of Minnesota, a great research institution. And one of the things that's unique here is that this is one of the few, maybe the only, Big Ten research powerhouse that's here in the city. Like, I went to the University of Illinois at Urbana-Champaign. I went there to study mechanical engineering. I chose Illinois because it has a wonderful engineering school, and I wanted to go out of state. I grew up in Ohio. But one of the downsides to Illinois is it's 2 hours away from Chicago. That's not optimal compared to the University of Minnesota right here in the heart of the Twin Cities. So the U is a big advantage that we have going for us here. From a public policy perspective, more support for the U will be good for your goals of having a stronger tech hub here. So that's a policy action that the state could take. More support for the U, more funding for their research programs. That can lead to a stronger tech presence here. We've also got just a good culture here that I think welcomes people. My wife and I came here. Great, easy place to live, get woven into the community, lots of cultural activities here. I think it's an attractive place for highly educated people to want to come. That's also a strength for Minnesota. The cluster of Fortune 500 companies is also a strength. I know I've read some of Margaret's writings or interviews about how it probably doesn't make sense to just pick a random tech sector and say, we're now going to go lead in this. We're now going to go lead in social media. Like, it's very hard to just recreate something. It's better if you're starting with a base. Well, the good news is we've got a very strong base here with the leading with this cluster of Fortune 500 companies. One of the things that's unique here is how engaged our business leaders are in the community. I see that in the Minnesota Business Partnership. I see it in Itasca. There are so many groups where our Fortune 500 leaders are engaged in the community. That's great. That's a huge advantage that we have here. So as I look at the strengths and weaknesses of Minnesota as a tech center, I think we have a lot of strengths for us. I think that relative to all the other Midwestern states, I wouldn't trade places with anyone else. But from a public policy perspective, I would say more support for the U can help us. I would also say the tax regime here is somewhat of an impediment. When I was in California, I ran for governor of California in 2014. A lot of talk in California were businesses leaving California. I never once heard a business say, I'm leaving California to move to Minnesota, just to be candid. And the reason is, when businesses go through the brain damage of lifting themselves up and moving somewhere else, they're going to pick a low-tax state. They're not going to go through the brain damage of picking themselves up and move to another high-tax state. So now these things are in conflict. If you want more resources for the U, the money has to come from somewhere, but we should be aware that tax competitiveness is a factor in where businesses choose to locate, as is regulatory competitiveness. And so I'm not here to offer you a negative message. I think overall Minnesota is very well positioned, but more focus on making sure the bottom rung of our education ladder is getting a good education. That will help feed your businesses. More support for the U to educate the top end, I think will be good. And then a more attractive tax and regulatory climate, I also think can help on the margin continue to do what you all are doing. And so that's what I wanted to, I just kick off the conversation. With that, I would love to turn it over to you, hear your questions, hear your comments. What did I get wrong? What am I missing? I'm here to learn from you as well, so thank you very much. So I think we have a microphone, and we're doing text questions as well, is that right?
Yes, sir. Randy, we got, or Neil, a few from the app. So Randy O asked, by forcing banks to contribute to a relief fund, which is essentially insurance, are we not giving them incentive to take more risk, which guarantees another crisis? Shouldn't we just let the big bad banks fail?
Yeah, so one thing thank you for the question. One thing that I skipped over, the first year that I was here, most of my time was spent with my research colleagues addressing the issue of too big to fail. And the bottom line is the thrust of the question is 100% correct. The biggest banks in America are absolutely still too big to fail today. And I think that's a huge public policy problem. And if they were to get into trouble again, they will be on their knees saying, you need to bail us out. And they'd probably be right. Why would we need to bail them out? A big bank is like a nuclear reactor. When a nuclear reactor melts down, you know intuitively, we don't care about the power company, screw the power company. We have to go in and stabilize that nuclear reactor for the sake of all of us. Because if that reactor melts down, it's devastating for the community. That's why governments will go in to stabilize nuclear reactors. Big banks have that same downside risk. And that's why in 2008 we had no choice but to put taxpayer money in to stabilize them. So we analyzed this for a year. We brought the best experts in the world to Minneapolis to look at a wide range of scenarios, including breaking up the banks, including doing nothing, including a whole range of different options. And we came up with what we're calling the Minneapolis Plan that we released in November. It's on our website, and it basically says this: if we double the capital requirements of the biggest banks in America, the biggest dozen or so banks, we can basically address too big to fail. What does this mean? I bought a house a year ago, my wife and I did. The bank made us put 20% down on our home. Why did the bank do that? They did that. That 20% is there to protect the bank in case we get into financial trouble. Well, if we make the biggest banks put 20% down on their investments, that is enough to protect you and me, to protect the taxpayers. Now, the banks hate this because it's going to hurt their stock prices. Too bad. Not our problem. So I agree with the question. We can go into this in a lot more detail. All the details are on our website if you're interested in learning more.
Hello.
Hi.
There it goes. Hi, my name is Josh Beal, and I'm from Minnesota State University of Moorhead. And we're part of the non-U of M group. And across the state of Minnesota, there's a whole other university system that includes not just the U of M, but of course, other four-year schools like Moorhead State, and there's Mankato State. I think Metropolitan State is here somewhere. I saw them, and a whole other series of colleges, and not just the four-year schools, but two-year schools as well. So I don't really have a question. I just wanted to call attention to the fact that there is a whole other part of the university system in the state of Minnesota that I think there's an opportunity there, not just from a research perspective, but also supplying technologists on the four-year level and future entrepreneurs, as well as technology leaders, but also on the two-year level, where I think a lot of those potential workers and employment assets come from across the state, anywhere from the Twin Cities area all the way up to Thief River Falls, Minnesota, that have a lot of great hardworking students and professors that have a lot to offer as well.
Thank you. I couldn't agree more. And you know, when I come up here and I give brief comments on the front end, I'm not able to capture everything. So I agree 100%, and thank you for raising that point. You know, when we think about the disparities in our state and we think about high school dropouts, I mean, not everyone needs to go to a four-year college. But increasingly in our technology-driven society, people do need more skills as a general matter. And so whether it's getting a 2-year certificate, a 2-year degree, or a 4-year degree, let alone the master's or the PhD, they're all important. Absolutely. And what I want to do is figure out how do we get more Minnesota kids into those good schools, wherever they are, so that they have the skills to work, provide for themselves, and contribute to our society. So, amen, absolutely. Others?
Hi there, Neil. Bryce Austin.
Right there, right in the middle.
How you doing?
Hi.
In this highly regulated banking environment that we have today, how do we try to level the playing field so that the smaller institutions don't have an undue burden compared to the big ones to meet all the regulatory things they have to now?
Yeah, absolutely. So again, you all are perfect straight men setting me up. Our too big to fail plan has multiple components. The fourth component is relaxing regulations on small banks, community banks, that are not systemically risky for the country. They did not cause the financial crisis. And if a small bank were to fail, we don't like that, but there's no risk of it bringing down the US economy. And so we absolutely agree small banks need to be treated differently. Right now, they're being smothered by the same blunt regulatory net that was targeted at the big banks. Unfortunately, that regulatory net did not solve the too big to fail problem, but it is hurting small banks and forcing them into mergers, and it's harder for them to be competitive. So we believe that by forcing the largest banks to issue a lot more capital, that will help level the playing field with the small banks, which will not have such high capital requirements, and we can relax some of the regulations that are smothering those small banks so that they can compete, so that they can grow, and they can serve their communities the way they are uniquely capable of doing so. So I agree completely, and it's actually a core part of our plan.
Hello, my name is Carolyn Dry. I have a small business in Winona, Minnesota. I used to be a professor at the University of Illinois, however, in architecture. So my question is, if we look, say, 10 or 20 years out, and the Fed has as one of its goals maximum employment, what are the plans for dealing with the impact of computerization and especially robotics on the unemployment rate? I know that, I think it's Denmark has just started a fund for lower income people, sort of a survival fund, so that there's a minimum amount of money that they get. So are there discussions about this, and what are the plans?
Yeah, so this is a hot topic right now, where a lot of people think about self-driving cars, self-driving trucks. What is it going to mean for the cab drivers and the truck drivers? In some cases, truck drivers have very good livings today. They work very hard. If those jobs go away, what happens? So this is a big debate. The honest answer is no one yet knows what this world is going to look like in 20 years. The negative scenario is the one you described, where we're going to have a lot of people out of work, and they're not going to have the skills. They're going to need fewer and fewer very high-skilled workers. And then the question is, some people are saying, maybe you need something called a universal basic income, where folks who don't have those good premium jobs, they get something from the government. So that's one vision of the world in the future. Another vision is that change happens, and change is hard, but new types of jobs emerge. So I'll give you an example. When most of our country worked on farms and automation came to farms, people also predicted the end of labor. Well, it turned out they went into factories. So the end of labor, that prediction was wrong. They moved into factories. No doubt the transition from that farmer to the factory worker, no doubt that was a hard transition for that individual, but it did not mean the end of labor. So my honest answer is, I don't yet know what the future looks like. Is it going to be the doomsday scenario where there are just not enough jobs, or are they just going to be different jobs than we can envision right now? I don't know, but it's a topic that a lot of people are thinking about. The Fed won't be able to solve it by ourselves. So if as a country we went down the path of we need a universal basic income, that would be up to Congress and the executive branch to decide. That would be up to the people to decide through your elected representatives. It's not something the Fed would be able to implement or have influence over on our own. But these are issues that we are interested in, and we are doing research in to try to understand which direction this is going to go. We just don't know yet.
Good morning, Neil.
Hi, way in the back, yep.
My name is Sunil. I'm with Performix. We are a local tech company. My question is around digital currency. From Federal Reserve point of view, where do you see that movement going, or are we ever going to embrace that, like bitcoins or blockchain? Just your thoughts on that.
So this is a topic that a lot of people across the Fed are paying a lot of attention to and watching how it evolves. I think that sentiment has shifted in the markets, in the Fed. I would say, I think conventional wisdom now is that blockchain and the underlying technology is probably more interesting and has more potential than maybe Bitcoin does by itself. And the problem I have with Bitcoin, and I'm sure people who are watching online this is gonna trigger a tweet storm of haters, but the problem I have with Bitcoin is while it says by design you're limiting the number of Bitcoins that can be created, it doesn't stop me from creating Neel coin, or somebody from creating Bob coin, or Mary coin, or Susie coin. And if you go back in time, go to American history, every state had their own currency. So even if you had control over the number of New York notes, if you couldn't control what Washington was doing, or Pennsylvania was doing, or Boston or Massachusetts was doing, you still had inflation. And so I haven't heard of a digital currency solution for just a proliferation of competing virtual currencies. And so that to me is a fundamental question I have about Bitcoin or other virtual currencies and their risk for inflation just because of competition. Nonetheless, the underlying technology behind it of the blockchain does seem to have a lot of potential. A lot of big banks are looking at it, asset managers are looking at it, and startups are looking at it, and the regulators are paying attention. But I think it's too soon to know where this is going to go. I mean, the tech sector is great at a lot of things. Hype is also one of the things the tech sector is great at. And when I was at Goldman as a tech banker in the early 2000s, nanotech was about to change the world. It was about to change the world. I'm still waiting. When I was in engineering grad school, I kept hearing about artificial intelligence. This is in the late 90s. My view on artificial intelligence is it seems to be tracking cold fusion. They say it's 20 years away, but it's been that for the last 50 years. I don't think Google autocomplete is quite what Skynet had envisioned. So we'll see. We have a lot to learn. Others, yep.
Hi, Neil. Shane B. would like to know, how transparent is the Fed with its spending and policies? Is there an audit process in place, and if not, why?
Yeah. Oh, there absolutely is an audit. Every year, we're audited by a Big Four auditing firm. Every transaction we do in the markets is reported, it's documented, it's publicly available for the world to see. So this notion of audit the Fed has been a political hot potato for the past few years, and it's really a misnomer because we are audited every direction you can possibly imagine. The only thing that is kept confidential at the Fed are our monetary policy deliberations, and they are released, a transcript of our meetings are released with a 5-year lag. And the reason we do that is we want our colleagues and myself to deliberate and put politics aside. We don't want our decisions about the short-term interest rate decisions to be influenced about who's winning the election, who's in Congress, what the president is saying, what different senators or congressmen or women are saying. We literally want our deliberations to be shielded from all of that. Let's just look at the data and make decisions based on what the data is telling us and the long-term goals that Congress has set for us. So that one piece of our operations has been carved out and is confidential, but again, only for 5 years. At the end of 5 years, a full transcript is released. But in terms of the spending of the Fed, the monetary policy operations, buying and selling securities, all of that is fully audited and fully available for all of you to go see for yourselves. Yes, in the back.
Good morning, Neil.
Good morning.
In the back, my name is Bob Keller. Welcome. The type of clients that I work with have benefited from the Minnesota Angel Tax Credit. So your comment on state tax policy struck a chord with me. So my question is this, imagine in this room if we were members of the Minnesota legislature rather than MHTA, what words of advice might you give us?
I would say do your best not to be in a position of picking winners and losers. It's very hard for government officials to pick winners and not pick losers. It's better to have market participants picking winners and making those decisions for themselves. I think generally speaking, overall, whatever you can do to improve the overall climate, the competitiveness of the state, the friendliness of the state for entrepreneurship, that is a good thing that will probably yield benefits. I'll give you an example. If you look, Germany has invested huge amount of subsidies to subsidize solar technology in Germany. Well, if any of you have ever been to Germany, it's not a great solar state. This is not Arizona. It's not like sun shines in Germany year in, year out. So huge taxpayer dollars went in. The question is, do you have a viable industry when those taxpayer dollars dry up? It seems like the answer for Germany is no. And so the problem is, if you say, well, we're going to go and we're going to make Minnesota the social media hub of the world, and you're going to spend billions of dollars attracting social media companies here, they may come for a while, but the risk is, do they turn around and leave when the taxpayer dollars stop flowing to them? So that's why instead of picking winners and losers, try to improve the overall competitiveness, how overall friendly the state is to startups, to entrepreneurs, to innovators. I feel like that is a more likely scenario to succeed than trying to pick one industry or one area and say, we're going to pick this and put all of our eggs in that basket.
Couple personal questions. What are you reading right now? What can you recommend to all of us? And are you considering a political role in Minnesota in the future at all?
I'll answer the last one first because it's the easiest. No, I have no plans to run for office again. I love my job. The reason I ran for office, by the way, is the same reason I joined the Fed. I care deeply about public policy. And you can affect public policy a lot of ways. You can affect it as an elected representative, or you can also affect it by championing smart policies as a policymaker at the Federal Reserve. So I feel like I'm already fulfilling what my desire was in my role, and my role is terrific. So no plans to run for office. What am I reading right now? I just finished a book on Ben Franklin. I've been going through and reading books on each of the founding fathers. And so I just finished a book on Ben Franklin. And now I'm reading a book, I can't remember the title of the book, but there's a fairly new book out about profiling chiefs of staffs to the President of the United States, from Nixon's chief of staff all the way through President Obama's chief of staff. And it's very interesting. If you're interested in politics and policy and government, it's not a very long read, but that's an interesting book I'm reading right now. Did I capture all three questions? Yeah, good.
And one related follow-up. How did a mechanical engineering grad end up in a top economist job in the US?
Good question. So I started out as an aerospace engineer doing R&D on NASA missions. My managers, I worked for what was then TRW, now Northrop Grumman in Los Angeles. My managers wanted me to get a PhD, but I knew if I did that, I'd really be committing myself to a lifetime of research, which I was not ready to do. So I went back to business school, I got my MBA, and then I joined tech banking in San Francisco just because it seemed like a combination of tech and finance, which I had just learned about. But I always had an interest in government, and the short story is when President Bush picked my CEO, Hank Paulson, to become Treasury Secretary, I basically cold called him and said, I want to come with you. I don't care if you want me to lick envelopes. I just want to come and learn and serve. People at Goldman thought I was insane. I was 4 years out of business school, giving up my Wall Street career to go work in government, and I thought they were insane because this was a once-in-a-lifetime chance to get to serve and learn. And this was before the financial crisis. We didn't see it coming, and so I learned a ton. I started working with economists, learned a lot from them, and along the way I learned something, maybe the most important lesson that I've learned is nobody is as impressive as they seem from afar. And when you get to work with people and you learn and you meet them, you realize what they know, you realize there's a lot they don't know, and then all of a sudden it's empowering because you're like, I don't have all the answers, but I know you don't have all the answers either. So now that we've got that aside, let's sit down and let's put our egos at the door and let's just honestly try to answer this question. And that message, that lesson has been learned for me over and over and over and over again. And so that's now why I feel very confident working with a wide range of people, attacking a wide range of problems, because I'm pretty sure nobody has all the answers.
last question, Neil, and then you're off the hook. Karen H. wants to know, we really appreciate the focus on closing the economic gap in Minnesota, and you mentioned some of the reasons are unknown, but in your opinion, maybe some hypothesis on how we close that gap and any possible solutions.
Yeah, I mean, to me, there's no magic bullet, there's no silver bullet, but to me, education, it must be the great equalizer in our society. It must be. It is the only tool I have come across that can break the cycle of poverty, because you get that one kid a good education, now not just that life is transformed, their kids, their grandkids, a whole lineage is now transformed to a better future. And so it's got to be education. You know, we looked at some data in Minneapolis public schools, and if you just put a graph of the teachers by school, which teachers have the most experience versus how diverse the schools are. The more diverse the school, the less experienced the teachers in Minneapolis. So the kids who need the best teachers are getting the least experienced. It's the opposite of the way that it should be. And so education is going to be part of it, I can guarantee you, but we're going to do our work and we're going to present you with findings. And Minnesota's work on, by the way, the Minneapolis Fed's work on early childhood education came before me. I'm really proud of that work. I felt like they have made a big contribution. We're not done yet, but we're making progress, and we're going to keep bringing forward good ideas that are founded in solid research. Thank you all very much. I really appreciate it.